You're wondering, is this the right time to sell my business? One of the key questions you would be having, and you'd be like a lot of other business owners, is what will I get for my business? Now, I always recommend that you go get a professional valuation for your business. You should also recruit the services of a professional accountant, attorney, and business intermediary or business broker that is highly experienced into the transition of business ownership. But let's talk and stay on the track of business valuation. We recently did a valuation for a company that is in the logistics consulting business, so this will hedge a little bit in that range, especially when we begin to talk about the multiples. But I'm going to keep things really simple and make this a really short video. Seller's discretionary earnings is that amount of money that a business owner can get out of the business if they're working in the business on a regular basis. Many business owners that come to us own their own businesses and have worked in the business for many years and are looking to see what they can do to get out of their business. But that earnings is the amount of earnings that you're getting in a business. Ebitda is the same sort of business earnings, except for it's also accounting for business manager. Now, I hear a lot of people think to themselves or hear on the street, hey, my business, I heard, sells for a certain number times earnings. What's important is to make sure that you're talking about the right earnings to begin with, and then the right multiple to apply towards that. And again, this is just a general level valuation aspect. You should go get a professional valuation, because no two businesses are exactly alike. No two businesses are exactly, or no one business is exactly perfectly spot on in the middle range average. Nonetheless, it give you an idea if you're somewhere near where you want to be, and if not, where you need to go. Seller's discretionary earnings is the factor of looking at a variety of different numbers. It's the profit on the bottom line of your income tax. We know that that bottom line number for most businesses does not fully represent the total earnings of the business. There's a lot of other things. There might be things like non-recurring expenses. Maybe you've spent some money on a one-time to redo a website, or maybe to redo a showroom or remodel something in order to prepare for going on the marketplace, or not for some other reason. Non-recurring income might be in this case of getting the PPP loan. It's certainly not repeating over and over again. I hope it never repeats again. Non-operating expenses might be some expenses that you're paying. As an example, we recently dealt with a client who's paying their spouse $3,000 a month. She had once worked in the business, stopped working in the business, but liked getting that check, and so the husband kept on paying the $3,000 a month. Non-operating income might be some income that's coming in from some expenses, or rather from some rental properties, an example, adjacent to the property, but when the business sells, that income will not flow to the new buyer. Adding back things like depreciation, amortization, and interest are also considerations for getting to the seller's discretionary earnings, and then, of course, what that one particular owner compensates to themselves. And that would include all the different benefits that owner gets, including maybe life insurance, health insurance, etc. Okay, so then we get to the seller's discretionary earnings, and that's the income that one person gets if they're working in the business on a full-time basis. And just one working owner, if there's spouses and family and members and other people that are working in the business and it's all coming in the same household, those other people, besides the one working owner, have to be replaced based on market value for labor. Now, you want to figure out how to go to Ebitda. The easiest overview, simple way is to go look at the market level of what it would take to bring a manager in to run the business, to run that business, and then take that away from the seller's discretionary earnings. So you might have a seller's discretionary earnings of $500,000, and in Ebitda, let's say that it takes about $100,000 to pay a manager to run the business, $400,000. Okay, so what do you begin to do with that? Again, just to get a high-level view, you might go look at what the marketplace has sold similarly. Again, this is a logistics consulting company, so we found some freight brokers and other businesses that sold. This business was actually doing about $4.2 million in annual revenue, so we pulled some businesses that were slightly under that and some that were slightly over that. But in general, we found 5 businesses. I'd like to have more than that, but this gives you an idea. That SDE, or seller's discretionary earnings, there's a multiplier of that. There's a multiplier times Ebitda. There's also a multiple of top revenues, but you could have $10, $20, $30 million if the business isn't making any profit. Quite often, the marketplace isn't exactly interested in buying that business, although sometimes they are. We're going to stick with SDE and Ebitda multiples. You see on the minimum, the lowest performing sales was at 2.19, and the highest performing multiple was 3.63. That's the number that you might multiply times that owner benefit of the business, which we said was going to be about $500,000. But I like to look at the mean and the middle number, the median. The one reason I like the median number is that it sort of takes into consideration some outliers. So something very, very, very low or very, very, very high might not be fully represented, might skew off the numbers. And so I look at that median number quite often and say, is that a good multiple? Again, this times the $500,000 of owner benefit would give you 1.5 million or something like that, and 1.8 million or something like along those lines. And those are pretty important numbers. Again, it gives you an idea that your business is probably not going to give you $10 or $20 million, and it's also going to get you a lot more than $1 million for your earnings. The Ebitda factor is the same sort of thing. The low end and the high end are here. The mean or the average is right here. And in this case, the difference between the median and the average are not all that far apart. Again, look through your database, see if any don't apply. You can sort of work to get rid of some or add some others. And again, this gives you just a beginning idea of how to think about the value of your business. If you're nowhere near where you need to be or want to be or hope to be, maybe it's not worth going to the marketplace right now. On the other hand, if this is somewhere up on the green that seems reasonable, I'd go move forward, reach out to some advisors and get some professional advice to help you really lock in where your business is worth. Okay, hopefully this is of use to you. You can reach out to us anytime you want. We'll put a little message at the very end of the video so that you can contact our company. But whatever you do, reach out to professionals, reach out to the International Business Brokers Association. If you're in Florida, the Business Brokers BBF, Business Brokers of Florida, are also great resources, but there's lots of great people out there. Make sure they have experience and make sure they care about you, your business, as well as having the knowledge to do a great job. Thank you. Bye-bye.